The last time we saw a setup quite like this was back in July of 2024. The markets then proceeded to sell off over 10%. So will that happen again? Well, the answer to that may lie in what Goldman Sachs is talking about into the year end. And in today's video, we'll uncover that data along with the flows from mutual funds. Could they be getting started for a bigger move in small caps as they rotate around the markets? Well, one thing's for sure, there are some things heating up right now, and one of those is what we've been talking about now for the last couple of weeks. Bitcoin continues to strengthen, and it's putting the biggest pressure on now in what could be a monster cup and handle pattern. On top of all of this, though, there are opportunities around the world, and as we know, one of the hottest stocks that's been disappointing over the last 2 weeks could be setting up for an island reversal. Join us today as we cover stocks, commodities, and cryptos, including the latest dark pool activity and, of course, the macro that you need to see. Well, welcome back, everyone, to The Daily Show. My name's Tom, and in today's video, we have a lot to cover, including what's going on with this market right now. We'll begin with the stocks, then we'll go to the cryptos, the dark pool activity, and, of course, the charts that you need to be looking at, including flows. So let's begin with valuations. Is this expensive in the markets right now? Well, 33.1 was the valuation back in 2021. And now, according to Matt Ceramonaro, it's about 26.7. So it's actually 19% cheaper. Now, this is only one metric, but what it does show you is that in general, markets have, of course, shown improvement, and this is a good sign for the economy. It also shows you that bubbles can get bigger than they are currently, especially when it comes to things such as AI stocks. So the question then you've got to ask is, are we going to see some form of epic crash right now? Well, this chart from Grant Hawkridge shows you something that I think is very important to pay attention to. We've got the banks riding out right now, and they're saying that debt is on the rise, and of course, they're looking pretty healthy on the balance sheets. And this led to the last 24 hours, KRE, the regional banks, breaking out as well. This tends to be a mid to late cycle style asset class. And of course, this sector is really riding high on currently yields and rates coming down, allowing people to feel a little bit more confident about taking debt. We already do know that small business loans are now the highest they've been since the global financial crisis just before. And this has everybody saying, well, the fireworks could begin as early as mid-2025. And I tend to agree that this is going to be a much harder year for us to navigate. So make sure to subscribe to the channel, as 2024 is not going to be the same as 2025. Of course, we know that there's always volatility on the horizon. Speaking of where we're at right now, we're 2 years into an S&P 500 new bull market. Now, you may argue, well, we've been in the bull market since 2009, but you've got to remember when a market sells off 20% or more, that technically puts it in a bear market. So therefore, when it goes back into a bull, that is the new beginning of these particular charts. This is a great one because what it illustrates is that we're right smack bang in the middle of a normal return from the 2022 lows. And this means that we could be leading into even further gains. But I think where it becomes more interesting, and this is why we're mentioning 2025 could be wild, take a look at 1 year returns following a 2 year new bull market, up, down, and all around. In fact, there's a lot more up, down, and all arounds than there are almost bullish positions. And you can see here it becomes a lot more murky when you're entering into the third year. So this is going to be probably the most important time for many of us out there as traders and investors. Let's take a look, though, into the end of the year. What is happening right now? Well, the first thing that we've been mentioning on the show is that the VIX is really high. And at the same time, the market is making all-time highs. Well, we do have 103 other instances of this, and when we've seen this type of thing, as you can see, the market returns over the next 12 months have actually been relatively favorable. In fact, the win rate ratio is better than normal at 89%. So you could argue, well, high VIX, especially over 20, if we remain there, could be very bullish. The thing is, though, I don't think we're going to remain there. And of course, we dropped under 20 over the last 24 hours. So remember, when it comes to the VIX, usually you see an elevated VIX after a massive crash and it stays high for a while, e.g. 2020 into 2021, and then eventually it will drop back under 20. But that recovery phase that happens near the end is why you get a stat like that. Now, what about for the end of the year? Well, we know that median monthly flows when it comes to equities tend to spike into the end of the year as people go for, of course, their Christmas bonuses. November is actually one of the highest overall flows as a percentage since 1996. And you'll notice here that January is the one that beats it. So we're probably going to get some type of buying that happens into November, and you've got to keep that in mind. And this brings us to Goldman Sachs' tactical flow of funds. And they're claiming here, and this is a very interesting fact, the equity market sell-off is cancelled, they say, and a year-end rally is starting to resonate with clients, shifting from hedging from the left tail to the right tail. Institutional investors are getting forced into the market right now, given FOMO, fear of materially underperforming the benchmark equity indices, is currently high. And remember, there are a lot of funds that could be behind this year, including CTA funds, because we've seen those really drop the ball, especially after August, and miss out on all of those sweet gains. Hopefully you've been watching the channel, so you've been able to be better in terms of prepared for those particular sell-offs, as we've done some of them live. And of course, we've got the daily show where we've covered all of that stuff. Let's now talk about flows, though, outside of the stock market. Let's go over to Bitcoin. Are we seeing Uptober back? Well, it certainly seems so. And as we've mentioned several times, we're kind of in the calm before the storm, and we're still potentially at the calm before the storm because flows have gone to a 4-month high, but we haven't seen Bitcoin break the absolute highs yet. That doesn't mean, though, it's not about to. We know liquidations have been fierce over the last couple of sessions, and we've already been covering some of the whales on the wrong ends. But now it looks like whales are entering into the markets on the Bitphoenix and possibly Binance Spot side, and they're buying big time when it comes to volumes. So volumes are improving, markets are moving, and it looks like people are coming in to the Bitcoin flows. And I had us posting over on X some of the reasons why it could be that we see something like Ethereum go secondary. So is Ethereum setting up for a big move in the future? Well, here are some of the reasons we wrote over on X, and I thought it was worth mentioning here. So firstly, it's holding above the key trend line, which we've been looking at for quite some time. That's, of course, a tick. It's also consolidating in a 3-month triangle at the moment, triangle pattern here, which is a tick. And of course, we are starting to see the potential here for Ethereum to follow a Bitcoin breakout. Risk on sentiment is also improving on hyperscalers such as the Russell 2000. And we have something like an inverse head and shoulders that could be forming as well as a potential other booster when it comes to pattern trading. So there are a couple of things to like about Ethereum. Obviously, Bitcoin leads, and it usually takes 1, 2, even a month for Ethereum to start to follow behind. But still, I thought it was worth mentioning because it isn't a bad chart. Now let's move over to the stocks, though, again, and look at some unusual flows into this earnings season. And we know that the next 24 hours is important. TSM in the morning, Netflix in the afternoon. The first big 2 tech stocks, especially after the ASML leak. This will be very important for TSM to get the job done. And we may see a lot of volatility moving forward because, as we know, this earnings season isn't about the S&P's volatility. It's about single stock vol. So single stock volatility is up big time. And we know that Netflix and TSM are going to be good starting points. TSM in particular could move upwards of, I think it's like plus minus 7.5 at the time of this recording in terms of implied vol. Now, we mentioned some dark pool activity. Well, take a look at this. Someone just placed the largest trade in the last, well, since inception, actually, on this particular Ethereum position. This is the FEEETH, which is Fidelity Ethereum Fund. The largest trade and another fairly big one up near the highs. Are they positioning for a breakout in Ethereum? It certainly could be so. So again, some large dark pool transactions coming through. Take of it what you want. And of course, what you're usually looking for is the follow-up to be the price action. GDX also seeing some large trades, as we mentioned the other day. And of course, China also starting to see a bit of the buy the dip reflex here coming through. We're looking for more information on that. And in the soon, we'll be looking for structure. So obviously, that's an interesting point. Remember, we called China earlier here on the channel together. We saw it rip to those highs. We thought it was overpriced at that point because it was too fast, too quick. And now it's coming back to much more reasonable prices. Eventually, China will do a second stimulus that's going to excite the market. It'll just have to be between 7 and 10 trillion yuan. If it isn't that high, the market won't like it. Okay, let's move to flows now. So we've seen clean energy come through over the last couple of sessions. A few people in our private trading community have really pointed this one out. It's had some good charts on it. and it's doing quite nicely indeed. Metals also coming back over the last 24 hours as copper hit that main support line or main demand line. And banks, of course, doing very well, led also by KRE, which broke to the upside. More on that soon. KRE is now the best performing 5-day stock sector, gold second best performing, and utilities making a big comeback after seeing that sell about a week and a half, 2 weeks ago. Solar, however, is doing very poorly. So remember, that could be one of those election style plays if you want to pay attention to it after the election. Okay, well, let's now take a look at the charts. And a lot of people have been posting this similarity. Of course, an engulfing candle similar to this one over here that was followed by a little bit of a higher high and a huge sell-off. A lot of people saying, well, it's going to happen again. A big sell-off is just around the corner. The unfortunate thing, though, is that this is just an engulfing candle. Do we know these markets are overbought? Yes, we could start to say, okay, we have many other reasons. But remember, in technical analysis or anything when it comes to investing, you're looking for several reasons. And really at this stage, we only have everything being overbought, sure, but we have no trigger. So an engulfing candle may not be enough unless you're some kind of credit seller. And I think that's an important thing. We often say patience, react, don't predict. Even if you missed an initial sell, you ultimately could pick up a nice buy. So let's take a look at where the buys could be if we do end up seeing a sell-off, which at the moment, we don't really have the flows to justify. The first one is going to be around 57.89. This particular pullback here for day traders could be a very interesting point. And I think for day traders, they're going to be looking at that. Not only will we have a daily 20 moving average moving up into it, but we've also got anchored VWAP. We've also got demand structure. We've quite a lot of confluence in this particular position. Now, if the markets then go further down, let's say hitting into the 56.80s, of course, that's where we would see secondary very strong support. And that would mark around a 3% sell-off. Remember, the chance of getting another 10% is statistically rare in the same year. And it's more likely, based on the charts that we've seen before and our discussion about flows, Goldman Sachs reports and everything else, that the markets will still try to boost towards 6,000 for the end of the year, if not even higher, just basically because everyone is going to try to push it there. A wipeout will generally be bought by the street because the street is scared of underperforming the market. Let's now have a look at the S&P 500 to see if it makes sense from a positive or negative gamma sideways kind of report. So we know that we're in neutral at this stage. We know 57.80 is where we've got that major support level on the charts. Plus we've got a put wall sitting there over the next 24 hours. And if we manage to get past 58, kind of 70 again, we enter into super positive gamma. And that will probably push the market into 5,900. So of course we know that the markets are still inherently bullish. And even with an engulfing candle backwards, it's probably not going to be enough just yet. Let's move over to Tesla. 225 is the major core wall that everybody will be looking for to get on board kind of the momentum train. We'll check the charts out in a moment, but as we've seen several times now over the last couple of days, 200 to 215 is exactly where we've got those put kind of supports, and we don't expect the market to be able to break under that easily. Will we get an island reversal? That is really the main trade that people will be looking at. Let's now talk NVDA, and you can see here that NVDA 138, 135 kind of stuck within a positive gamma flow. Generally speaking, NVIDIA is still in positive gamma, so it's hard to fight against it, and we would expect at some point soon for it to make an all-time high. Stanley Druckenmiller actually coming out over the last 24 hours and saying it was a mistake for him to sell NVIDIA, and he regrets that. But again, like anybody, I'm sure he's being adaptive to these markets. Let's now talk about treasuries and some of the lead indicators here. Treasuries getting an engulf to the upside off the 61.8. That's a little bit more confluence there. We do like treasuries at around these levels. And I think if you're looking at a 12-month horizon, you're probably going to be okay. But a lot of people try to trade it. Do remember treasuries is a very difficult trade, and that's why we don't tend to go with that too much on the channel. When we move over to US dollar, you can see it's bounced a lot, which is very strong. It's starting to become overbought, but that doesn't mean it can't go higher. Next key resistance is at 104.09. There was no selling around this particular supply. So pretty much that's the way we're looking at the market at this stage. If we look at copper, nice bounce off our watch reaction here level. It's nice when you nail a zone so heavily that it actually instantly reacts off that area. And copper has started to do quite a lot better. A few people have actually been buying in. I think it's got to break some of these downward trend lines first. You can see here it's going to be a little bit difficult to draw the trend line, but I'm going to draw it above those highs because I think this is a key level. And we'll be looking for that type of thing and this supply to be broken. So copper looks like it's starting to recover. And at the same time, we'd be looking at iron ore, which obviously is very important as well, which is holding its ground. Now, this is all good for HSI, which we'll look at later on in today's video. But you'll notice HSI is starting to recover as well, hitting into the 2-hour 20-moving average. It's not quite at the 19.5 level, but this is not a shocking zone around that 20K that it was just 24 hours ago. Now, with all of that going on the metals, what else is doing well? Gold. Take a look. It's about to make an all-time high here as we're recording this particular video, and gold is one of our favorites here on the channel. Of course, for the longer-term hodlers, yeah, you can't lose faith in gold just yet. We've got 3,000 to hit first. Yeah, right, guys? At this point, we're still moving forward. We've been talking about this since $1,800 an ounce, and it's been the time of gold. Really one of the best asset classes of the year. It looks like some of the runners, if you left them on from the day trading last week, are doing well. But I think most people should be turning their eyes over to silver if they're not in gold. And the reason is quite easy to understand. Take a look at this overall resistance. If the markets do break through this point up here, then they could move easily to the 3450 we've been talking about for a while. And we will be watching silver very closely. Although it didn't have an easy kind of bounce level in here, unless you were just kind of predicting or positioning, it didn't have a good day trade there. I do think this could be setting up, and we'll be watching silver, especially into the close on the weekend. What about for oil though? Well, oil has started to show signs of basing. Now, this is around the right level that we've talked about over the last couple of sessions, and we're starting to see oil do better. Will we see day trading bulls if we get past 72 a barrel? Not the cleanest of positions I've ever seen in terms of setups, but I think it probably needs to get back above there to really start to look positive again. And it has held so far that downward trend line breach. So swing traders will like this level. And I think people positioning for bullish oil, you can't hate this zone. It's pretty well set up in terms of technicals at this point. Now, but what about Tesla? Another little doji. 1, 2, 3, 4, all trapped together. That usually means a fairly explosive move is about to happen. Now, could it be an island reversal towards the upside? Basically, where the market gaps down, the market gaps up. You can see we've got an alert for it. If that does happen, we could easily fill the gap at 240. And I think a lot of day traders will be looking at Tesla. So we know 225 as well, just so happens to be the high, guys, is also the call wall. So if we get through, positive gamma takes over, etc., etc., etc. Now, just to prove that ASML wasn't worth paying attention to, we can see here that ASML continued to get dumped over the last 24 hours, but NVDA held up. And this just shows you that when you really pay attention to the news over the price action, you might get too freaked out. Now, semiconductors did continue to hold low, and really it was the best. It was NVIDIA that really held up, not necessarily all of them across the board. But still, we'll be looking for the weekly close and seeing what's going on with semis. They're holding that 20 moving average as best they can. Now, we mentioned Walgreens over the last 24 hours. It continued its strength. This could be a huge turning point here for Walgreens. And although it's a trash stock, I understand it's been moving in an aggressive way since, of course, the earnings restructure. And this is one of those turning points sometimes for these stocks. When we have a look at FXI, you can see here that Chinese stocks have been coming down. That's to be expected. They dropped about 20%, and now they're finding a little bit of buying pressure. Ultimately, this is probably less of a trade and more of a position-based buy or position-based entry because, of course, it could easily do this before it does this. It's going to be one of those ones that requires government really intervention further into the market. If we have a look at healthcare, it held its own over the last 24 hours, which is, of course, a decent sign when it comes to markets. And if we move over to financials, they continued to move up, along with, of course, regional banks. Regional banks broke out over the last 24 hours, going through the ascending triangle. This is a good sign for the US 2000, which has been our strongest sector of the week or strongest market index of the week. And it's just done so well. You know, this is something that we've spoken about a lot in our private community as well. We've liked the setup. It's been replicable, and so far, so good. Will it hold and make a new high for the weekend? Well, we're not too far away from knowing that. But if we do, we could go to 24.38. And even from here, that presents an upside possibility of 6.4%. So things still looking pretty good there for those stocks. What about the US 100 though? Well, you'll notice it's a completely different scenario. The pretty much tech stocks that have driven the market most of 2024 have been struggling in recent times. And while they're still finding, generally speaking, buyers, they're not doing amazingly over the last 24 hours. So this is something we want to be paying attention to. And it could be that we're just seeing full-on rotation, which is exactly what you would expect into the end of the year, into a point where Russell tends to do better and people start to take that risk-on sentiment, which we are seeing. Now, speaking of risk-on sentiment, two things. Let's go firstly over to Bitcoin, and we'll move this over to a candle chart. Look at that. Beautiful move here, pressuring that 68.5 level. And this is exactly where you expect Bitcoin to start to maybe have a little consolidation. If it does breach through here, then remember it's taken out the downward trend. So that will be significant, along with the cup and handle kind of pattern that a lot of people are looking at. And I think just in general, the overall stats. Remember, it's September positive, October, November, December. Those 3 months overwhelmingly generally bring positivity. And that means that all of crypto could start to do a little bit better. Certainly a resistance here for Bitcoin, but maybe it's a play for Ethereum. So as we mentioned before, we've got the symmetrical triangle, we've got the ascending trend line itself. We have the possibility of an inverse head and shoulders breakout, and we have some consolidation. So Ethereum being a little bit slow there over the last 2 sessions, and that's to be expected. It always takes longer to catch up, but we'll be doing a little bit of Ethereum Bitcoin ratio moving forward, because the chances of Ethereum trying to make it back to 3,800 or 4,000 at some point still seem to be on the cards. And yeah, it's looking better. And we did see some dark pool flows. For the rest of the week, Thursday is pretty much the day, which is less than 24 hours away. Core retail sales and retail sales are the keys that we want to be looking at. And remember, if you enjoyed today's video, please remember to follow us on the social medias. Check us out on X. Also, if you're interested in any of our courses or replication, you can check that out in our 7-day flash sale down below. Thanks so much, guys, for watching. A lot going on, very interesting times, and the rotations we've been talking about have currently been seen. So this is great times for the markets, and it's been a fantastic 2024 so far. Hopefully you're doing well. We'll see you in the next one. Bye for now.